Okay. Hello, everyone. And today, with us in this Money Talk, we have a very renowned guest. We have Ganapathy Puranik. Uh, if I am correctly spelling your name, sir. And
Yeah.
yeah, he is a country head for capital market and custodian service in cooperative regional rural bank segment, India's Bank. So, hello, sir. Welcome on our platform. Myself, Manish, and I graduated in electrical engineering from IIT Delhi. Currently, I am employed in Jaguar Land Rover, and I'm also working on this startup with Arpit. So, along with me, Arpit is also here. So, yes, sir, we can start.
Okay. So, hello everyone. Ganapathy Puranik here. So, I've been here in the capital markets for approximately about 20 to 25 years. I've learned all my lessons the hard way, and I thought that I can probably share all these things with you. Okay, then let's go through the entire presentation, which is being shown to you guys. So, this is about capital markets and capital markets. I mean, why should you start early? And this is for investments for teens, or you can say India is a very, very young nation. So it's very, very important that people who are in their young phase or in the youth of their life, they should know why is financial literacy or why is investing such an important feature of their lives actually. Not only, I mean, it takes them to a different level, but I mean, financial stability adds a lot of dimensions to your life. So, what does exactly financial literacy mean? I mean, Mukesh. So, if you can probably take on to the next slide, that
Yeah,
would be
yes, sir.
great. And yeah, Mukesh and Arpit, I mean, you can ask me questions as we go on because, I mean, although there is a certain agenda which we have prepared, any questions, I mean, from your side would be welcome because I firmly believe that all discussion should be an extempore kind of discussion, wherein,
Yeah, yes.
I mean, you ask questions and then probably the way I know I will try and answer, and whatever answers I have would be purely out of experience and not rather anything from the textbooks, which normally happens. So I would rather anticipate a more meaningful discussions through questions which you can pose to me.
Yeah, sir.
So let's look at first what exactly do you mean by financial literacy? I mean, by financial literacy, I mean every guy can be educated. For example, Manish, you yourself are a electrical engineer. You are an engineer, which means that I mean you are probably a little above average financially literate person. But at the same time, probably financially, from a financial perspective and from an investment perspective, you probably would not have learned so much during your educational backgrounds and colleges and everything. So basically, what does it mean? I mean, I would classify being a financial literate into probably three or four parts, probably five parts. The first would be basically, I mean, you need to earn. Everybody earns. Once you are at a certain age in life, you need to start earning. And when you start earning, it is not that you can spend the entire money. I mean, across whatever you feel, because the youth today, I mean, they believe that you earn today, you live for today, and there is nothing like tomorrow. But then when reality comes into the picture, I mean, you need to save, you need to invest. So probably the second thing is whatever you earn, a certain amount of that needs to be saved or needs to be invested. That is point number two. Point number three, spending is equally important. Why would I say spending is equally important is because you need to live your life. You need to understand where you need to spend. You need to spend on your EMIs as well as your home loans, multiple other things. But spending is also equally responsible But when you are spending, you need to be very, very conscious on the facts as to where you are spending. Fourth is probably borrowing, wherein you need to borrow a certain amount of funds at times. For example, your housing loans, your other housing appliances. There would be certain other requirements which you would have. Let's say even for your higher education, you need to borrow, but you need to plan all these things. And probably the last and the most important thing is one, planning and protection. Protecting, I would mean you need to understand insurance. You need to know where and how you can protect not only your family, but also all your near and loved ones. You need to take care of all of them. There are certain responsibilities which every person has, which, I mean, he needs to execute in his life very, very effectively. So financial literacy would basically mean that you need to earn, you need to save as well as invest, you need to spend, you need to borrow, and you also need to protect. Protect, I would mean insurance and all those other aspects. So that's a small gist about financial literacy part. Any questions up till now, Mukesh?
Yeah, yes, sir. Uh,
Any questions up till now, or should we go on?
yes, sir. Like majority of the questions looking around us, like you just explained. Like I am a graduate in electrical engineering, but a very little knowledge about the finances, personal finances
Correct.
and professional finances, and all about that, like investment
Correct.
and savings, all that. So this is like we are at a stage where only 25%, only 24 to 25% of the population of all complete countries financial literate here.
Correct. Correct.
So like we are on a mission, like our main sole motive is here to educate at the early age, start educating at the early age. So like,
That is very, very important. That is very,
yes,
very important that you actually start educating all your kids or your young population at a very, very young age, because they need to be responsible in their spending, one. And second, they also need to understand the value of investing as well as saving. I mean, today, like I said in the past, I mean, not in the past, a few minutes ago, that people just live for the day. I mean, they think that when you live for today, and whatever you earn, you need to enjoy today, and there is no tomorrow. And the most important thing, as far as every investment goes, is compounding effect. Today, probably at my age, which I can tell you, it is at the wrong side of being called as a youth. I have very little time for me to invest and then reap those benefits of those investments. Whereas you all have, I mean, as good as about 30 to 40 years where you can only invest and earn those investment returns over a period of time, which will secure not only your current as well as your future also very, very strong.
yeah,
So, I mean, kids need to be, I mean, I wouldn't call all these this age group as so you are probably not an age where I would be calling you as a
yeah,
kid. I mean, but I think so. Your younger brothers, or I mean, they need to be told about all these kind of things, and they need to actually come into the investment and saving space, because they also need to learn about finances, about savings, about investments, about spending.
yeah.
I mean, everything. They need to be conscious about what they do.
So we have
And
slides where we will be discussing about the investment, why investment is necessary later in this presentation. So
okay,
yeah, we can
great.
move on the next slide.
Yeah. So if you see the next slide, just one second. Yeah. Um, this is basically, I mean, what we just discussed, why to teach about finance to your kids at an early age. So you need to teach your children early.
Sorry, sorry. So I guess I mistakenly mute you. Sorry. Can you unmute yourself? Yeah, sorry.
Yeah.
Yes, yes. Okay.
Okay. Now I'm audible.
Yes, yes, yes. perfectly.
So basically, same thing that I mean, I need to actually teach all my kids. I need to. I mean, let's be very very honest. When I speak to my own daughter, and when she's also trying to become an engineering graduate, just like you, Mesh. So she's also not from the financial space which I belong to.
Yeah.
But at the same time, if I ask her very very simple things as to, I mean, what is the interest rates which are going in the market, or probably any other insurance policy, she has absolutely no idea. And which is where I feel a little concerned, because today I am there to protect her. Similarly, you would have your younger siblings, you would have kids, and they depend on their parents or the guardians to protect them from all these kind of financial issues. But unless and until we don't teach them, and if something happens to us, they might
Yes.
tomorrow earn a lot, but probably they will not know how to save that money, or probably how to invest that money for future. That I think so is a big critical issue as far as all kids are concerned, and we should hence start teaching all our kids from a very very young age as to why is it very very necessary to learn investments and saving products. Because whatever you save today, and the earlier you start, the better it is for them in the long term. Because then what happens is, one, the young kid, when they grow up, they become self independent. They can look out for themselves in this big bad world. And I mean, over a period of time, they become a far better citizen of the country than any of them. So if you ask me, I've tried to teach my kid the importance of all these financial aspects. Failing, but I still keep on doing that. I try to keep abreast with all the savings, all the mutual fund schemes and everything. I try to keep my daughter updated about all these things as much as possible. It's not very very easy, but yes, we need to do that, because kids need to start understanding finance at a very early age. And believe me, the power of compounding, you have absolutely no idea. As on date, that is probably the biggest thing which benefits young people. Today,
Yes.
whatever you save, probably in 10 years time, I mean, it becomes great amount of investments. I mean, I don't know how to uh, take that up right now, because the power of compounding is something which is such a huge kind of a concept which every young person should understand. And I mean, try and implement that in their own lives and careers. Can we go to the next slide,
Yes.
please?
Yes, sir.
How to teach money to the teens? that is the uh, that is the $1 million question.
Yeah.
The teens, believe me, are in their own world. They are in their own world of happiness. They think that money, investment, savings all belong to their parents, their guardians, the seniors, and it is not their cup of tea. And the only thing which they are interested or bothered about is I shouldn't be saying that, but they are just bothered about their own enjoyment, probably living the life to the fullest on that particular day. And
Yes.
this is probably the most difficult thing which every you can say a person, Mahesh, even for somebody of your age, if you've got siblings, I mean, to teach them all these kind of things, it's a tough job. And believe me, I mean, you have to keep on doing it. You have to teach your kids time and over again. It will not go through for them, but still you have to keep on doing that. It is to be persistence. I mean, saving and investment is about persistence, and teaching your teens also is about completely persistence only. You need to completely be in sync with what they think, and persistently try and keep teach telling them as to what saving products are important, why investment is important, and why financial security is very very important. Tomorrow, when you have financial security, I mean, you can hold your head high. If you're not dependent on anybody, I mean, that is probably the best thing in life which any person can have. It enhances your personality, it enhances your confidence. I mean, it brings a whole new change in your perspectives of life and overall as a person also. So, I mean, how to teach about, I mean, to the teens and everybody, teens, you need to be just persistent. You need to keep on hammering on their heads as to this is important. Keep on telling them that's the only way. And probably, if it is possible, you need to demonstrate. You probably need to bring out certain examples. Every teen has some idols, so you have to probably identify and make them relate with those idols. I mean, Bill Gates, or probably Steve Jobs, or even Narendra Modi. I mean, all these kind of people, they've been so financially prudent that over a period of time they made huge amount of success in their own personal lives. So I think so. That is what we need to do. We need to be very, very patient and very persistent with our efforts. We need to keep on hitting on to them that they need to do all these kind of things time and over again till they probably sink into their minds that these are important aspects in their life and it is for their own benefit and not for their parents or their guardians. Any questions up till now, sir?
Yeah. So, like just for the previous slide and this one, like basically majority of the population is financially illiterate. So like considering that many of us uh, taking an example of myself, my parents are not financially literate, so they tend like they themselves afraid of the finances. So this is a basic problem where every child faces, or many of us, like you just said, you are financially literate and you try to educate your child at this age, but many of us do not get that kind of benefit. So how to tackle this?
So that is where YARO makes a lot of difference, right? I mean, there has to be institutions, entities. I mean, heart on heart, you guys are doing a brilliant job here. You guys are doing something which uh, I don't know. I don't have too many words, but just appreciation for what you guys are doing, because what initiative you guys have taken, it's a brilliant initiative. I mean, today when you catch people young, you make them aware of all these kind of. You are a big brother, yeah. You are a big brother to a lot of teens. I mean, when they look up to you and you give them, I mean, the kind of advice which you would try and help them with, probably a few years down the line, they will realize the importance of what Yaro has been doing in their lives. And probably they will come back and thank you. And at the same time, try and mold a few other teens in this kind of activities related to finance and everything. Yes, everybody needs an elder brother, everybody needs a guardian, everybody needs a parent. And I think so, if you don't have an elder brother or parents who are financially literate and who can probably guide you towards these financial goals, I think so that is where I mean, Yaro comes into the picture, or our teachers come into the picture. I mean, we hold our teachers at the highest level as far as respect is concerned, and that is where I think so. I would also hold Yaro in that same respect, because you've taken a very daunting as well as very challenging task about being elder brother, a guardian, a person who probably shows the way of life to a lot of these teens who probably would get distracted with the kind of chakachond of the world, as you would say. So I think so. You guys are doing a great job here. And yes, I mean, we need mentors. You need to probably enroll. I mean, this is only a suggestion. It's up to you. You need to probably enroll mentors who are financially literate and who would be able to help the participants who come and join organizations like Yaro.
Yes.
So, I mean, that is my only take as far as these things are concerned. This is a process. It's not something which will change overnight. It's not something which you can do it a flick of the button. It is not something which you can just read a textbook and you will learn things of life. Believe me, I mean, even after learning, or even after about 20-25 years of capital market experience, believe me, I'm also still a student only. I cannot, I cannot at any point of time say that I've learned a lot. I mean, every day I learn something new. Every day I find a new product. Every day there is something which is happening in the financial market, and everything is changing rapidly. So I think so. Mentors are very, very critical. Organizations and apps like YARO, very, very critical as far as young people are concerned. This is the time when their perspectives towards money, towards life get framed, and that is where you guys come in, and if you help shape them, I think so you guys are doing a great job.
Yes.
So that's my take on this. So can we move to the next slide,
Yeah. Yes,
or
sir.
any
Thank
other
you.
question on these?
Like I have like a similar question of this
Tell me now.
the previous question. Like due to the financial literacy, like many parents are hesitant, like they hesitate to involve their child's in this kinds. They thought investing is kind of a gamble. Like many parents have this perception, like this is like if you do investment, you will sunk in it. So many of our parents have this perception, like you shouldn't do investment because they haven't experienced at their age, they haven't known the power of the investment. So this is like this mindset develop in us. Like I'm at around 23rd at 23 years, and I started my job. It's been around 6 months, but I still hesitate to invest. Like this perception develops in within ourselves.
Uh, okay. So you are a science graduate, right?
Yes.
You understand the theories of probability,
Yeah.
right? Okay. Now, gambling is also a science. Am I right? Even when you throw your dice into a roulette, I mean, there is a theory of probability which works, and it's not that you can't make money out of gambling. There are people who do make a lot of money out of gambling. But if you ask me, what is the percentage of people who earn out of gambling, who actually make a money out of gambling, is hardly anything, and that is why the majority is always afraid of gambling. Similarly, there have been so many instances, or so many cases wherein people have committed, you can say, returns. I mean, there are people who say that we will double your money in 30 months. There are people who say I will give you an interest of 20% per annum, and all those kind of things. And it is the greed of that particular person who goes and invests into a instrument which will double you in 30 months. And that is where, I mean, most of these people, they end up having all these kind of apprehensions. You, out of your own greed, you feel that this is a safe bet, and then that scar, I mean, when you fail to earn that doubling effect in 30 months time, and that scar, and if you probably lose your principal also, then that scar will remain in the entire life. Believe me, there are more scamsters, or there are more people who try to dupe you out of your own money than people who try to help you also. And that is where all our regulators come into the picture, and that is where, but again, like I said, this is a very, very slow kind of a process. You will make mistakes in life. It is not that you will make mistakes only in investments, but you will make a lot of mistakes otherwise also, and people learn from their own mistakes. But that doesn't mean that we stop living. That doesn't mean that we stop investments. It doesn't mean that we stop savings. So even, let us say, if you are, let's say, a science graduate, and if you probably don't understand the world of investing, the best place to invest is, I mean, why don't we start investing or making our savings only through a fixed deposit? Small baby steps. Once you start investing into small deposits, you make a small lump sum, you will start seeing all those kind of funds which are coming into your account. Once you make savings as an habit, then you will start looking at all other investment options. You will start considering whether you are getting, let's say, 5 or 6% into your saving deposit. Can your principal be protected and you can still earn a better rate of return? What are the kind of risk involved? I'm not saying that you should go for a structured product or something like that from day one. Investment doesn't mean that you go right up. I mean, everybody is an investment expert, and hence you can do wonders with that. No, it has to be small baby steps. You need to be starting small. You need to take those baby steps. First, start with a fixed deposit, then look at probably a mutual fund, and even within a mutual fund, look at something which is there on the debt side rather than on the equity side. Once you are comfortable taking a little bit of risk, then you earmark certain amount of money only for equity, and then you can start investing in equity. But it has to be a very slow gradual process. The more and more you will get into that kind of a habit of saving, investment, and that to safe investment, that will give you a lot of confidence in taking the next steps. You need to learn about allocating your money in various aspects. I mean, your house is also an investment. What you spend with your family is also investment of your time. You need to do that also. You need to have certain emergency money also, which is liquid at all points of time. So all these kind of things are important. Even if you are not aware of the financial instruments, start small steps, take baby steps, start with an FD, graduate into a mutual fund, start looking at debt, and then probably then go to equity, and then probably structured products, and multiple other instruments which are there in the financial world, which will give you the flexibility of investment. But you cannot have the apprehension of I mean, this guy has duped me, or this is what has happened to me. Everybody needs to read what they are investing in. If somebody is going to come back to me today and say, "Ki boss, I will double your money in 30 months," and if I give my money to them, whom can I blame then? So I think so. It is again a mental perspective, or everything is there in your mind. I mean, that this guy is going to dupe me, or investment is bad business, and all those things. Yes, but everybody also, even a science graduate, or even a arts person, or a non-financial guy, knows that today money will not double in 30 months. What is the guy doing for him to double the money in 30 months? I mean, that is what we need to look at. And probably if we start looking at that, there are so many institutions in this country which gives you safe money, protects your principal, gives you a decent rate of return. There are PSU banks, there is government securities. I mean, if you're giving your post office savings, I mean, they give you decent amount of returns. Yeah, it is not going to be doubling your money in 30 or 15 months, but they give you decent amount of returns, which I think so. That is where I will advise that every person should learn where they want to invest, not go like, I mean, even in the equity markets, there are so many dime a dozen people who would come and tell you that you please invest into this stock, it will double, this will give you phenomenal return, this will give you that, whatever, and everything. I mean, people come and say that there are companies which are fundamentally very sound, but their price is, let's say, 1 rupees 59 paise. I mean, how can you have a stock which probably is traded at that value? It's called a penny stock and have sound financials. I mean, either the understanding of the financials are wrong, or one does not understand investment. So even the I mean, whatever we choose as a financial advisor, that also has to be carefully introspected also, because a financial advisor should not be leading you towards all these kind of things wherein, okay, to put it very, very simply, there is no easy money in this country. There's no easy money in this life. every day you have to struggle, you have to make worth a lot of effort. There's a lot of effort into all these kind of things. There's nothing like easy money. So if you look at it from that perspective, and if you understand that there is no easy money, you will not run after all these kind of schemes, the stock tips, vagara vagara and everything. So as long as you are not doing that, yes, then only you will get that confidence, because you start small, you do small businesses, or you do small investments, but the confidence is important, because you're not going to be 100% right every time in your lives, but whatever mistakes you make, you should be able to absorb those mistakes and go to the next part of your life.
So basically,
I mean, does
like
that answer your
yes, yes,
query?
yes.
I mean,
Yeah, I got you. Like this is like this is the basic perception many parents and from where it comes, it's pretty clear. So like next two slides, all like you already covered that all the aspects. Like it is just an introduction to what is investment, why people invest, and why should invest, why should anyone anyone in start investing early.
correct. So I think so. During our discussions, we actually covered everything,
Yes,
and
exactly.
yeah. So I mean, there is one more thing which I would like to again re-stress upon. I just spoke about it. Investment, I would again say, is not only into financial products. You need to invest in your family. You need to invest in your relationships, and those investments are also equally important. So if your relationships are important to you, if your family is important to you, if your friends are also important to you, believe me, there is no better parent, there is no better friend, there is no better instrument than, I mean, probably investments. So I think so we should treat them at par, uh, like my family. They are a part of my family, because I mean, all my investments will come handy at the time of my need. My friend might not come in handy tomorrow if I have some urgent requirement, and if I go across to my friend and do ask for some sort of a support, probably he will not be able to provide you that support. But if you have investment, that is the best friend you can have in life also. So I think so there's nothing more important than investment, because one, it makes you confident, and you are dependent on yourself. You're not dependent on anybody else in this world. So that's where I was coming from. Can we go to the next slide, or any other questions on this?
No, sir. Yeah, that's pretty much. And yes, this is the next slide is basically the types of investment that we have.
Yeah. So, okay. When we are talking about investments, we always need to earmark certain amount of whatever we earn in all these aspects of life. So, hello. Yeah, Mahesh, you are there?
Yes.
Yeah. Okay. So, I mean, these are the types of investments: basically direct equity, mutual funds, fixed deposits, real estate, NPS. So, okay, I would actually twist this entire slide a little, if you don't mind. I would say
Yeah.
that you need to start a little with fixed deposits. Fixed deposit is something which you can always keep with any of these banks. And I would rather say that fixed deposit you should keep either a PSU or a private sector bank, but they should be regulated by the RBI. And as long as you have all the regulators having all giving you all the comforts, I think so that's a good bank and a good place to start with. Probably after fixed deposits, you should also look at national pension system, wherein today whatever you save, they invest into the debt schemes. And NPS is a very good system, wherein probably you're securing your future post your retirements and everything. Third, I would say, is mutual funds, wherein you need to start investing into mutual funds, probably a balanced fund to start with. Mutual funds are basically, collective pools of investment, wherein it can be as low as 100 rupees and can be as high as any amount, whatever you can invest. Then probably you should also look at real estate. By real estate, I would mean your own home. You first need to look at that. Whenever you have taken care of your own home, then you probably need to look at some other investments in the form of real estate. Some commercials, or some commercial property, or some additional home, or probably in the form of gold also. So even before probably taking your second home, if you probably invest a little into gold, because gold is probably the most liquid form of investment, before going into direct equity. So direct equity or the stock markets, these are things which you should probably do when you are completely financially stable. You have taken care of all your requirements in life. And then whatever is your surplus, you should be investing into equity, which probably at any given point of time, if the equity market, because that's completely 100% risk weight asset, it will give you the maximum amount of returns also, but it can take away your entire principal. So equity should be held last, it should be kept last. So that is where I would re reiterate the entire way these investments should be done.
Yeah. And like for the teens, like who at early age who will be starting their investment. So for them,
They
like
should only start with fixed deposits.
yeah, they should start with the
And
fixed
if they
deposit.
fixed deposits, and if let us say they do, I mean, they want a little bit higher rate of return, then either NPS or mutual funds. They should always go into mutual funds which are either first debt, second balanced, or and then oh.
Yes.
So that's what I would like to probably put across. You
Okay.
first need to be safe, and then you can take risk.
So just next slide is just about what is a stock market, what is share market and mutual funds.
Mutual fund as well as share market. These are two different types of investments. Uh, okay, let's first to look at mutual fund. Now, what's a mutual fund? Mutual fund is basically a fund which has been created so that every person can invest, and they would do further investments, or there are fund managers or fund advisors, or you can say guys who are experts into investments. What are you doing is you are giving your hard-earned money with people who've been doing this activity for a long period of time, and they are considered as market experts. So mutual fund is basically a pool wherein every person can contribute in that particular pool. The fund managers or the experts, you allow them to invest into multiple stocks, debt, or whatever the schemes get approved for, and that pool gives you a return, probably should be a little more than your deposits or your safe rates of return. So mutual fund is basically a pool of funds which every person can invest into, and you get better rates of return than your deposits and everything. So the average yield for the last few years has been better than what you get on probably deposits, or even the government saving, the post office savings, or any other safe instruments. You're getting more returns into these kind of equity as well as debt mutual funds. So it's basically a pooling of money. And today I can tell you the AUM or the fund size has gone into thousands and thousands of crores. That is the kind of money which people have been investing. Uh, okay, I'll give you one more figure. Nearly every month. So there is something called an SIP. SIP is basically small investments which you do on a monthly basis. It is just like your EMI which you pay for your housing loan. Instead of of creating an asset like an house or a home. You are creating an asset into a mutual fund. So every month you save a little amount of money into a mutual fund scheme or something like that. There, on a monthly basis, the inflows currently is nearly 10,000 crores. So 10,000 crores is the total corpus, which nearly, I'm saying approximate, is on a monthly basis, which people are saving and investing into mutual funds. Uh, Very briefly on the share market. Share market is probably the place where you go to raise equity. And this is for all these promoters, to all these business guys, the entrepreneurs. I mean, whatever shortfall they have for raising capital, because you need capital to run your business, you need capital to expand, to do business. So I probably might not be very because I'm not able to get the right definition as far as the stock market is concerned. But share market is a place where you come to. I mean, even LIC does not need capital today, but LIC is coming into the stock market because that is where you get the valuation for what you're doing. You get a valuation or you get a price for your own business. You can raise capital also. There are a lot of people. I mean, even a company like Reliance, they raised rights a couple of years ago. About a year ago, they raised rights. So they raise capital from the equity capital markets itself. These get traded on a daily basis, and I mean, there are jackpots, there are gambling issues. Everything is there. There are penny stocks. So you come to raise equity in a stock market, and stock market is a place wherein you have the highest amount of risk and you also have the highest amount of gains also. So all the ills relating to investing, which we spoke about, you will get everything into a stock market or a share market.
Yeah.
Any questions on that? Have I been able to explain this
Yes,
well? I
yes.
mean, I don't know.
Yeah. Like we just like a brief introduction to the mutual funds and share market. The next one is the pretty important. The topic which we are discussing till now, like why investment for the teens, why we should teach the teens, like you already explained in the first in the starting of this presentation, and should we allow teens for the to invest or that benefit that this step contains in the long term.
No, we should. I mean, actually, when you tell your teens, when you tell your younger generation that they should invest, and see, it is something like this, that when you are actually promoting investment for kids or for teens, uh, like I told you, it gives every teen, when they make good investment decisions, they tend to become confident. They tend to think about their lives also. So it also develops their personality over a period of time. It makes them good people, and it makes them very conscious people of the decisions which they are taking. So it is very important for us to promote this, even if we have to, let's say, under the parental guidance or under the guidance of a guardian, we allow them to make mistakes when they are very young, because the amounts involved are very small. If you make mistakes when you are young, you learn from that mistakes, and then probably when the pie becomes a little bigger, you become responsible, and then you don't fritter away those money, and you hopefully will not make those same mistakes all over again. So probably it's very important that you, when you are small, when you are young, you get into the habit of investing. You get into the habit of looking at the future. You get into the habit of planning. You get into the habit of doing all these kind of things, which is very important, that we actually encourage our teens to get into the habit of investing, habit of planning, habit of being very conscious, all these things very early in life. They'll make mistakes, but that is okay. It will be under the supervision of either the guardian, the elder brother, or the mentor, or the parents, and they will be able to teach them and rectify the mistakes which they will do. But if you don't allow them to make any mistakes at all, then probably they'll make mistakes later in their life, which will become more costly for them. So very important for us to actually allow our teens to make all these kind of investments, all these kind of plannings at a very early age. Yeah, Mahesh, can we go to the next slide?
Yes, and we have the last just based on the previous slide, the question like how minors can invest. This is
So
for like
minors
YARO.
can, yeah. I mean, so minors can actually invest through accounts which are supervised by their parents or their guardians. So you can always have an account, either a bank account or a demat account for that matter, or any mutual fund investments. All these can be done by a minor, but it has to be supervised by a guardian or parents or somebody till the age of 18. After that, they are an adult and they can do that. But till that, uh, the guardians have to guide them either for an insurance policy or for a savings account or for, I mean, the best time to invest is for these teens when they are in the formation stage, when they are young.
Yes, sir. So basically, this is the question like where the arrow comes. So we start with like teaching. We start with teaching them about the investment, and along with that, we also provide the platform where a kid or a teenager can start investment under the parental control, like under the monitoring, under the guidance of their parents, under the guidance of their elder brothers or seniors, or maybe they can start investment. If they are below 18, they will be they will be using their parents demat account, and they can use their own demat after the demat account after the age of 18.
Correct.
So just I was sharing my experiences. So when I started earning, that was the first time when I realized the need of investment. So basically, at that stage, I tend to hesitate very much, like how to start. So my first step to start very a little, I invested 100 rupees, 200 rupees in various, like I bought a few stocks from this company at 100 or something. So this was the first point, and I just explore what are the different kinds of, and I just thought like if I had this knowledge few year backs, like I have some savings in my I saved, like many of us start saving at the early age, like when we are child, we tend to save in our gullak, and when we uh, grow further, when we get outside outside from our hometown, we get some pocket money with ourselves. So this was the first as I started investment. So that was a point where we felt the need, like there is a need to
Can
start.
I interrupt you, Mahesh? Can
Yes,
I
yes,
interrupt
yes.
you? So, in my view, that is probably the best place to start, wherein you give a piggy bank
Yeah.
or so what happens is every child, I'm saying every child is very possessive of their piggy bank.
Yes.
You go, you go put some money into that piggy bank, whatever you do, but that piggy bank belongs to that particular kid. And every kid is very, very possessive of their piggy bank. And believe me, when they have to draw anything out of that piggy bank, it hurts, which will make them conscious. And when it makes them conscious, they take good decisions. They will think
Exactly.
twice before investing anywhere, and they will find out aspects as to where should they invest, and they will not fritter away that money. So I think so. What you have just said is probably the best baby step which any investor can do today. And probably as a parent or a guide, I think so. The piggy bank is the first step for everybody to start. Sorry, I just interrupted whatever you were saying.
Yeah,
Please
yeah, yeah.
continue.
Yes, yes. So like on your say, like we also like introducing a feature where just we are digitizing that piggy bank. We right now till now we are using a physical piggy bank where you use just good luck. So we will digitize that. So if we are getting any kind of pocket money with our parents, we can just put it in our digital piggy bank, and we can use that money to invest.
You should. I mean, that is a very good idea, and I think so. I should all my wishes with YARO.
Yeah.
I just want to wish all you guys. I mean, it's a great activity which you are doing.
Yes. Thank you. Thank you
There
very
would
much,
be a
sir.
lot of people who would be, yeah, there would be a lot of people probably later in their life who would be thanking you for the kind of efforts which you are taking today. So my best wishes, my you can say I just hope and pray that you guys do very well, because whatever success you get, that will translate into a lot of successful lives in this country. So all the best, yeah, Mahesh
Thank you.
and Team Yaro, all the
Yes.
best.
Just to say no. वैसे no worries, sir. Myself Manish and with me Arpit. We both.
Yeah, sorry.
Yeah. No,
Yeah.
no worries. Thank you. Thank you very much. Thank you for the interaction and.